Hello everybody, this is Lara from Pure Elliott Wave with an update for Bitcoin. I'll also look at XRP and I've got an update for Solana for you. I'm going to try not to make this too long. I do tend to talk a bit too much. Well, Bitcoin tried to get over 100,000. It didn't manage to close there, but it did have a high above 100,000. It got up to 104,028.51 on the 5th of December. Did not manage to close above that point, and this candle is a high wave. This is a balance of bulls and bears. This indicates indecision and consolidation. What it is not is a bearish reversal pattern, so that's good to see. Bitcoin is now consolidating with resistance about 99,000 and support about 91,900. In my last video I told you that there would be really strong, or there was strong psychological resistance at 100,000. If it does manage to close above 100,000, I would expect energy to be again released to the upside. This is really strong upward movement we've seen here from Bitcoin back in early November, and now we're seeing a little bit of a consolidation. It's a little pause within an ongoing upward trend. This does not look like the start of a new strong downward trend. I would expect that this last low within the series of higher highs and higher lows, the last low here from the 26th of November at 9730.54 is most likely to remain intact. If we do see a lower low, that'll break this pattern of higher highs and higher lows, and then I would expect a deeper pullback. Now, I would not expect that means a bear market. I just expect we'd be seeing a deeper pullback to relieve short-term extreme conditions before setting up for the next strong bullish run. This is a really strong bull market for Bitcoin, but don't expect price to always move in a straight line. Sometimes it will a little bit, but normally it'll have pullbacks, and it'll have pullbacks and corrections, little consolidations along the way. That high wave candlestick that closed red has really strong volume, but we can't tell from this chart if volume was strongest on upward or downward periods within that session. The balance of bulls and bears was about even, so I'm not going to read too much into that. For the very short term, we've got a weak bearish signal from on-balance volume from yesterday's session. We might get a little bit more sideways or downward movement following that, but it's not a strong signal at all. It's only got the minimum required 2 anchor points. You need to draw a line. It's got a bit of a slope and it's not long held. So a very, very weak bearish signal from on-balance volume. ADX is now below 45. That's good to see. It's increasing again, telling us that there's still an upward trend. It's not going to take much to get ADX above 45, but this market can sustain a very extreme trend for quite a long period of time. This is only the daily time frame. Only when ADX gets very extreme at the weekly time frame would I expect that this bull market might be in danger of a bigger correction. There was single bearish divergence at the last all-time highs for Bitcoin. This is not double bearish divergence because the close for price on this pivot is below the close for price on this pivot. So there was only that short-term single bearish divergence, only on the daily time frame. Only when we see this look on the weekly time frame would I then be expecting a bigger consolidation or pullback for Bitcoin within the larger bullish run. We don't have that yet. A little consolidation has pulled RSI and money flow back into neutral, and it's bringing down ADX. ATR overall showing a little bit of a decline for the start of the consolidation, starting to show a little bit of an increase again. We might be about to get a breakout sooner rather than later above 100,000. Overall, I'm still extremely bullish on Bitcoin. Don't expect this bull market to move in a straight line. Pullbacks and consolidations are normal to be expected parts of a bull run. It's actually really healthy for the short term to see those short term extreme conditions relieved. It sets the stage for the next bullish run. Let's have a quick look at Solana. I haven't updated this one for a while. This was my monthly chart. Jack had been doing it for a while, and I've changed my data feeds, so I didn't update this chart. I just wanted to show you it's doing exactly what I'd expected. The arrow was expecting this primary 4 to complete and then primary 5 to be underway. Target remains the same. So the Elliott Wave count is the same. I have a 5-wave impulse up for cycle 1, double zigzag back for cycle 2, 5 steps forward, 3 steps back, followed by a new 5 steps forward. 1, 2, 3, 4, 5. Now we're looking at the 5th wave to end a 3rd wave impulse. One thing to really note about this is it's the 5th wave to end a 3rd wave, which is usually the longest and strongest portion for cryptocurrencies of a 3rd wave impulse. This is where you get the most profit. This is what I mean. Here's an example looking within a 3rd wave. So this is a 3rd wave impulse. I won't look at the primary degree waves within cycle 1 because that's a 1st wave. They don't behave exactly the same as 3rd waves for crypto. So let's look at this big third wave impulse. It's the only comparable third wave we have to look at for Solana. I'm labeling it 1, 2, 3, 4, 5, and 5 has 1, 2, 3, 4, 5. You can see that in there. Let's look at the lengths of waves 1, 3 and 5. Wave 1 travelled 2.689, wave 3 travelled 15.605 and a bit, and wave 5 travelled 49.932. This is where you get the most profit in a third wave. It's the fifth wave to end a third wave, which is the longest portion of the impulse. That's where you get the profit. Well, you get the profit from the whole thing, but mostly within the fifth wave. So that's what I'll be expecting. Primary 5 to end cycle 3, I expect is going to be longer, and this is where I expect the most profit of cycle wave 3 is going to be found. Let's look at the daily time frame. We're going to look at the structure of primary 5 now, because it's the counting of this wave that's going to tell us when it's going to be complete. So I'm going to really rely very heavily on technical analysis at the end of this impulse for Solana. From this low to this high, I don't see yet a complete 5-wave impulse. I see 1, 2, 3, 4 and 5 underway, so I'm using my 95% confidence interval to calculate a target for minor wave 5. I'm not using Fibonacci ratios anymore. These confidence intervals are based on research, and that research was supposed to be published last month or the month before by the CMT Association in their once-a-year Journal of Technical Analysis. It should be out any day now. I'm waiting to hear from them. This will be coming out soon, and when it is coming out soon, I'll do a YouTube video for it, and you can all have a look and see what I've based these numbers on. These numbers give me a target range for minor 5 to end intermediate 1 from 272.38 to 275.50. Draw an Elliott channel around this impulse from the end of 1 to the end of 3. Place a parallel copy at the end of 2. The lower edge has beautifully provided support, well, not perfectly, but really well provided support for pullbacks along the way up. When this channel is breached by a full red daily candlestick below and not touching this trend line, then it may be used as an indication that this impulse is complete and the following 3-step back pattern is underway. 5 steps forward, 3 steps back, your basic Elliott Wave pattern. 3 steps back is a second wave, and it may not move beyond the start of the first wave below 110.02. Very quickly, technicals for Solana, it's finding resistance at 260, which is a previous all-time high, so very, very strong resistance there. If it can close to new all-time highs, then I would expect energy to be released to the upside, and then an increase in upward momentum, probably with some support from volume and an increase in range. At the end of this third wave, I would expect explosive upward movement. Look out for the potential of blow-off tops in coming weeks. So far, we've got a series of higher highs, we've got a series of higher lows. The last highest low within this pattern, a little bit hard. This is too small. I think this is too small. So I think if we want to be conservative, it would be this point down here. So I'll say in order for that pattern to be broken, we need to see a new low below 155.04 while that low remains intact. The pattern of higher highs and higher lows remains intact. We should assume that the bullish run remains the same until proven otherwise. Here's probably a little pullback, possibly within an ongoing bullish trend. Now it could move lower if we look for more downward movement, look for support at 210, below that about 190. There's a bullish piercing pattern at the last low here for the 3rd of December. This may be indicating that this pullback is complete. But the piercing pattern didn't have support from volume, so there's a little bit of suspicion about that. I don't have total confidence that the pullback for Solana is complete. If we do see more downward movement, look for those support areas, but also look for the lower edge of the channel on the daily Elliott Wave count. Last completed upward session is showing some support from volume though, so now we're getting some upward movement up off the last very short-term low from the 2nd, 3rd of December with some support from volume. So a little bit of an increase suggests maybe, yes, that short-term low could be intact. The previous upward trend only just reached very extreme. It can get much more extreme than this at the daily time frame for Solana. The pullback is now pulling ADX well down, back well below very extreme territory. There's plenty of room again for the larger bullish run to continue now. Between the highs of the 11th of November and the 22nd of November, price closed higher, but RSI reached deeply overbought and made a lower pivot. So this is short-term bearish divergence at the daily time frame. Because it's only short-term, it's only single, and it's only at the daily time frame, I expect it's only indicating a short-term pullback to relieve these short-term extreme conditions. ADX is now being pulled well down a very extreme. RSI is well back into neutral, it is entirely possible that the result of those short-term extreme conditions is now relieved and the stage is set again for the next bullish run for Solana. So I'd be looking out for any surprises to the upside. Likewise, money flow has short-term bearish divergence. It's double, actually. I could do 2 lines from this pivot here to this as well. And it's still nicely in neutral territory. So again, the short-term consolidation has now relieved short-term extreme conditions. The stage is again set potentially for the resumption of the larger bullish run for Solana. ATR declining during this little pullback, normal to be expected behaviour. Very recently, Jack Frost did a short update for you for XRP. I have a few things that I wanted to add, and I'm going to jump in next week for him as well and give you another XRP update. So for those of you who've been wanting that, watch this space for next week. I'll try and get that done Wednesday or Thursday. I've changed our data. The CCCAGG data that we were using for XRP had the wrong all-time high. Well, it had a different all-time high. It's not wrong. Different exchanges are going to sometimes have slightly different price points because these are truly global markets and no one exchange has correlated or accumulated every single piece of data. So there'll be little differences like any other global market. For example, gold. I'm used to gold doing that. Unfortunately, cryptos may do that as well. So this data I'm now going to get from Bitstamp. It has its all-time high in January 2018 at 3.32. So we haven't quite made a new all-time high as I thought we had when I looked at the CCCAGG data. That data has, but this data hasn't. I'm going to go with Bitstamp. My research shows it's probably a bit more reliable. I did have to fill in some gaps. It didn't have much of this data and it was missing a huge gap here. So I filled it in with CCCAGG data, but going forward, this is all going to be Bitstamp data, and this previous high, importantly, is Bitstamp data. I want to draw your attention to the duration of these waves for XRP. If you look at a similar analysis for Bitcoin, which I do for my membership every Monday, I give a usually about 20 to 30 minute video for my membership on Bitcoin's Elliott Wave count. I note there that its waves are fairly reliably exhibiting Fibonacci durations. XRP is not the same. It'll do it sometimes, but not very well. 42 months, no, it's too far off a Fibonacci 34 to say cycle 1 exhibited a Fibonacci duration. Cycle 2, a little bit too far off, 21 or 34, no Fibonacci duration here. But primary wave 1, one short of a Fibonacci 13. Primary 2, nope. Primary intermediate 1, yes, Fibonacci 8. Intermediate 2, one short of a Fibonacci 13. So it's a bit of a shot in the dark, really, if you're going to try and guess when, well, it's more of a guess, really, when are these waves going to end. These waves may or may not exhibit Fibonacci durations, but I'll give it a go. If primary wave 3 lasts a Fibonacci 3 years, it'll end November 2025. I'm going to use a 14.72 ratio. Jack's used that. I want to explain where it came from. That's the length of primary 3 to primary 1 within cycle wave 1. So if this is wrong, it's going to be too low because a third wave within a third wave is much likely to be more extended and much longer than a third wave within a first wave. These markets have extreme volatility and the third waves are usually long extensions, especially the fifth wave to end a third wave 1 degree higher. I've said this so many times before and it absolutely bears repeating. I'm holding a fair amount of XRP. I started buying it way back in 2019 and I'm still holding on to it and it's doing really well. I'm going to be exiting either for this one at the end of primary 3 or I'd love to be able to hold on to the end of cycle wave 3. If I exit or cash out my Bitcoin earlier, I might like to just hold on to get the gains of primary 5 in cycle 3 for XRP, and this is why. It is the fifth wave where you get the biggest profit in a third wave impulse. The fourth wave can be relatively brief and shallow, and the fifth wave has extreme volatility, especially with this market. It showed us last week how insanely volatile this market is. It's absolutely insane. I do not want to exit at the end of primary 3, be waiting for the end of primary 4, find out it's a bit more brief and shallow and be caught out as primary 5 absolutely rockets off faster and more quickly than I'd expected, and I'm caught out of the market when I really, really want to be in. So my ideal, depending on timing and my age and what I'm doing with my life, I ideally want to hang on for primary 3 to end cycle 3. primary 5 to end cycle 3. Primary 3 and cycle 3 may only subdivide as impulses. This impulse of cycle 3, 1, 2, 3, 4, 5. When it arrives, 4 may not move into wave 1 price territory. Now here's another really, really good point. This is 2 Elliott waves, Elliott wave rules you can use, and I am using to inform your trading and investing decisions. This works at all time frames. I'm showing you the monthly time frame. It'll work right down to hourly or minute. If you have confidence that it is an impulse, particularly a third wave impulse unfolding, and you enter your position within first wave price territory, so you're entering sometime within the first wave or hopefully toward the end of the second wave as it finishes that counter trend movement, that means you can hold that position to get the gains of the third wave. You can hold out throughout the fourth wave and be patient because it must remain above first wave price territory, and you can make sure you're positioned still correctly in the correct trend direction to get the gains of the fifth wave. Do that and be very, very careful if that's a third wave impulse that you're trying to trade and it's in a market with extreme volatility like a commodity or a cryptocurrency. It's the fifth wave to end a third wave that you get the most profit on. So holding out and being patient throughout the fourth wave to make sure you're positioned correctly for that fifth wave to end a third wave means you get the entirety of that third wave impulse. And if it's a third wave impulse, you're getting the most profitable portion, that final fifth wave. So that's how you can use that rule. The other rule is 3 must move beyond the end of 1. So if you enter within wave 1 price territory, your position will remain profitable throughout wave 3. 4 may not overlap wave 1. It'll remain profitable throughout 4. And then you apply another rule. 5 may only subdivide as a 5-wave motive structure. So you wait for a 5-wave structure to be complete. You use some classic technical analysis to identify the end, and then you exit on a dead cat bounce, all things being absolutely perfect. That's my plan for the end of cycle 3 anyway. Not going to go over any more numbers on this, or my video is going to be ridiculously long. Let's have a look at the weekly. The low of primary 2 here is this low down here, subdividing as a double zigzag. Intermediate 1, leading diagonal. Intermediate 2, I've got it as a rare triple zigzag. It's not a very rare structure, it's just not very common. I'll just snap that in. These data points are slightly different from Bitstamp to CCCAGG, so a little bit different here. Intermediate 2 complete here, so intermediate 3 underway. It may only subdivide as an impulse. Now here's a feature of cryptocurrencies I've repeated again before, but absolutely at this point in time, very much bears repeating again. Within a third wave impulse, particularly a nested third wave, this is intermediate 3 within primary 3 within cycle 3, so this is a nested third wave. This is the really, really strong portion of movement. It is the fifth wave, remember, that is often the strongest portion of a third wave impulse. And that fifth wave, the strength of it, has the power to force the fourth wave that comes just before it to be more brief and shallow than its counterpart second wave. If I get some labels in here for minor wave 3, motive wave isn't going to know where to put them. I put them here. Minute 2 would be probably an expanded flat. Minute 3 and minute 4 in here. Minute 4 is much more brief and shallow than its counterpart second wave, and that's because the fifth wave to end minor 3 has pulled minute wave 4 up, forcing it to be more shallow and more brief than its counterpart second wave. This is a very, very normal look for a market with extreme volatility. I'm used to seeing it in gold, but you see it to an even greater degree in cryptocurrencies because the volatility is so much higher. When it arrives, intermediate 4 may not move into wave 1 price territory below 0.9301. Let's go to the daily now. From the end of minor 2, this low here is this point down here. Now we're looking at the end of intermediate wave 3. I have minute 1, time-consuming double zigzag for minute 2. Minute 3 an impulse, exhibiting exponential growth. Nice curve here, nice curve here. Minute 4, probably a little triangle in there. I'd have to look at that at lower time frames. Doesn't matter, it's obviously complete. Minute 5 to complete minor 3. Minute 4 brief and shallow. And now minor 5 to complete intermediate 3 looks to be incomplete. Now, it could be complete here, but only 2.9. Intermediate 3 would be, I think that's far too short for a nested large degree third wave. Now it's possible, but I think it's a bit brief. I'd only really chart that and consider it if we see this labelling invalidated by a new low below 1.541, because minute 4 may not move into wave 1 price territory. Look out for the potential for minor 5 to end intermediate 3 to end with a blow off top with huge upward movement again, a huge explosive increase in momentum, range and volume again up toward the target. If intermediate 3 lasts a Fibonacci 233 days, it may end in February next year, and the target uses a fairly long Fibonacci ratio 6.854 would see it end at 4.84. If primary wave 3 lasts a Fibonacci 144 weeks, it may end in August next year. Very quickly, technicals on the daily for XRP. We do have a bearish reversal pattern at the high. It's not a very strong one, and it doesn't have push from volume. This is dark cloud cover, and it's coming after this huge, strong increase in upward range, volume and momentum. The moving average situation is full ball bullish. The short is above the mid, which is above the long. They all have positive slopes, and price is above all three. That's a full ball bullish look. Volume was very, very strongly pushing price higher to the last high for XRP. Now, as it's hit really strong resistance about the previous all-time high, it's unsurprising we're getting some consolidation or pullback here, normal to be expected behavior, and volume is not pushing price lower. Volume and range are declining as price falls. These candlestick bodies are getting smaller as price falls, and volume is declining as price falls. We're not seeing real strength in downward movement, so I don't think this is necessarily the start of a big bearish movement. So far it looks more likely to be a counter trend movement within an ongoing bullish trend, a reaction to short-term extreme conditions to relieve those short-term extreme conditions. ADX at the daily time frame is very, very extreme. We may need some more time-consuming consolidation to relieve short-term extreme conditions before the larger bullish run is ready to resume. RSI reached really deeply overbought, exhibited no bearish divergence at the high. It's still overbought. It's not back into neutral territory. So the small pullback of the last 3 days has not been enough to relieve short-term extreme conditions. Remember, this is just the daily time frame. I'm not giving you any weekly today. I'll try and cover that next week. Money flow reached overbought and exhibited single short-term bearish divergence. That's well back into neutral territory. So if we get just a few more days of a bit of sideways movement, short-term extreme conditions may be relieved and we may be ready to set up for the next bullish run. ATR is still increasing. This is based on an average, a 14-day average, so that decline in the size of the candlestick bodies isn't yet showing up in this data, but we are seeing a decline in the range of the candlestick bodies as price falls. There is some decline in volatility for the very short term. It's just not showing up yet in this data. That's it from me. I'm very, very bullish still with these three, all of which I hold and all of which I'll be keeping an eye on as they continue these third waves, and I'll be looking to sell some of my coins, definitely Bitcoin at the end of primary 3, and the rest of them, depending on how much they're making me, what I'm doing with my life, how old I am when they end, I might consider selling at the end of primary 3, or I'd prefer to hold on for the end of cycle 3. So what that means for you guys is I'll still be giving you updates from time to time on this channel for quite some time yet, probably a few years. Hope you're all looking forward to a lovely weekend.